We do this every Thursday at approximately noon. Oh, I'm so glad you're all here. We are going to talk about some interesting stuff, especially interesting this week. All the kerfuffle that's surrounding Schedule K2 and Schedule K3 turns out to be a tempest in a teapot. And there's a sales tax seminar coming up on maybe tomorrow or the next day. Tomorrow, this Thursday, maybe Friday, from the South Carolina revenue folks. And those are always good. So let's see where we go from here. There's the disclaimer. The most important thing about this disclaimer for me is to acknowledge the value of tax notes today, published by tax analysts, which is, in my opinion, the preeminent source of current information for tax professionals. They have a new utility, which is outside their paywall, to assist you with tax research. It's very handy. I recommend check it out. It's a 5-minute, sort of 5-minute free sample that you might be interested in. What's on the program this week? 10 items altogether. IRS cracking down on the use of a GRAT in estate planning. That'll be bad news for some of the older practitioners who are working with their older clients on estate planning. I did mention the K2 and K3. We're going to talk about that just shortly, a little bit. Updates on voluntary disclosure. Did you know there is a Form 14457, which allows you to voluntarily disclose a number of things to get started on cleaning that up with the IRS before they come and find you? It's an interesting approach. Tax court agrees with the taxpayer who was away from home. It just didn't do a lot of good. And then an update on the frequently asked questions on CARES Act college aid grants. Now, there are no college aid grants in 2022, but there were some in 2020 and 2021 that we need to clean up the compliance for. 2 short slide presentations, not government presentations at all, on complex tax topics. I thought it was useful. Tax analysts put these up in tax notes today. Cryptocurrency cost basis reporting, which is a problem for many of us. And then a short slideshow that defines wind energy property and the point in the transmission process where wind energy property is no longer eligible for the credit. Child tax credit eligibility requirements, a quick review of those, which is always useful, especially for folks that are just getting into to preparing individual tax returns. And those questions come up. And of course, clients have those questions as well. A process for recovery rebate credit claims and South Carolina coming attractions. So that's what's coming. That's what we have coming up. Let's get after it. If you have questions, please post them in chat. I will see it. Now, right now, I see 3 questions in chat. I'm going to click on the chat button. Can I remind you how you get the slides from today's call? Yes, you should be able to get those from Catherine. There it is. There's the answer. So the question and the answer both show up in the chat. What else is there? Oh, and that's reminding me that we're muted. So that takes care of the 3 posts that I saw in chat. We'll move on. If I can hit the right button, we'll move on. Here's an attempt to transfer wealth with a GRAT. It works. It's a great tax planning tool, but you can't mess around with your valuations. Here's what happened in this one. A GRAT stock in a family business was transferred to a GRAT. And if you just look at the transaction, it looks great. The problem was the stock was, in the words of the IRS, egregiously undervalued. So neither goal of transferring wealth or transferring income was achieved because the taxpayer's advisors, and I got in red, no individual ever planned and executed her own GRAT. That never happened. The advisors tried too hard exactly what happened. This is an internal legal memorandum from someone in the national office or regional counsel to a lawyer, or they're preparing to litigate this thing, apparently. Taxpayer could not ignore a possible merger, which was coming up, that a willing buyer and a willing seller will have considered, and rely on an appraisal of shares to be contributed to a GRAT before the merger was completed. So a willing buyer and a willing seller would have considered the value in this merger, but the taxpayer's appraiser didn't. So he got a Section 409 Cap A appraisal, looks great, made his GRAT contribution, which was double the prior year's share price. That looks great. But after the GRAT closed, the merger partner paid 4 times the appraisal. Now, the appraisal was double, so the merger partner paid 4 times the appraisal. That's quite a difference for the rest of the business stock. IRS says that's an artificially depressed valuation to a third of what it should have been. That was such a windfall for the remainderman that the taxpayer's retained interest could not qualify as a Section 2702 qualified annuity interest. The undervaluation was so egregious that what is a legitimate tax planning technique didn't work. Next year, 2022 returns, not 2021 returns. The IRS is going to be looking for a K2 on partnership returns if there's any chance that a partner's distributive share would affect the partner's ability to claim a foreign tax credit. That's what this whole thing is about. It's about the amount of foreign income which enters into a calculation of allowable foreign tax credit. And you can make the explanation a lot more complicated than that, but that's what it is. And the K2 is for partnerships. The K3 is for S corporation shareholders. So partnerships will file a K2, and a partner will get a K2. And it's possible that the partnership is required to produce the K2, even though the partnership has no foreign income, has no foreign investment, but may have other partners who do. The instructions take something like 24 pages. Fortunately, we've got some time to digest it all. Don't get in a panic. You're not going to have to do these schedules on the 2021 returns. That's what you're filing right now. And you got a whole year to get ready. The K3 is filed by the S corporation. And that's the shareholder's share of income, deductions, and credits. Now, I just apparently popped a chat. Let's see what we have here. Has the IRS announced definitively that no K2 or K3 are required for 2021? Yes. The K2 and the K3 will not be required. There will be no penalty for not including them in 2021. You have some time to get them ready. Now, let me remind you again, unless the partnership or the S corporation has foreign income or an investment in foreign assets, it is unlikely, not impossible, but unlikely that you're going to need to file a K2 or a K3. And thank you for the questions. That's how it works. Please feel free to ask a question. We have all lunch hour to do this. We're all, okay, okay, here we go. I pressed the wrong button again. As the information developed, the IRS intends to provide additional transition relief. This is on February the 16th in the morning, an article by Kristen Perillo the night before. If you have no foreign activities, foreign partners or shareholders, and without knowledge of a partner or shareholder need for information, it's possible that you could have thought you needed a K2 or K3, but for 2021, these qualifying domestic partnerships will not have to file the new schedules. This is a quote, see the quotation marks, from an IRS announcement. We're taking this step in response to feedback we received from the tax community and our stakeholders. Feedback, right. That's a new word for criticism and outrage. IRS will provide details of this relief soon. Now, that was in the morning. Stay tuned. Last week, Thursday, this is a duplication, at 12:50 p.m. on Wednesday, before last week's program, IRS issued 18 frequently asked questions on how and when K2 and K3 will be required to be filed with a 1065 or an 1120S, but they will not be required in any event for 2021. We were going to do a special podcast. This was going to take at least an hour, but we're not going to do it now until the IRS fills in a few more of the blanks. It's too soon. Now we have a taxpayer's advisor waving a white flag, surrendering. Don't shoot, I give up. Form 14457. There it is. 7 pages of disclosure, 11 pages of detailed instructions, including explanations of what to expect from the government in response to different disclosures. This requires a lawyer. It is above our pay grade. We're CPAs. We could theoretically fill out the form, but in filling out and in filing this form, you are admitting that you are not in compliance with some area of federal tax law. I think that's a bad idea for a CPA to try to carry the ball. We may recognize that a client has the problem, and our advice at that point should be, we need a lawyer. You, client, need to hire a lawyer. I will be happy to work for the lawyer, work with the lawyer to help you work out whatever it is you need to disclose in order to avoid the risk of the IRS discovering it. Then there is no opportunity for voluntary disclosure, and the full weight of the federal government and its enforcement of the tax law is going to fall on you like a ton of bricks. It's better to disclose. It is always, in my experience, which includes 4 decades, it has always been better to get ahead of the IRS with disclosure. Filing an amended return is one way. But if what you have done or not done is so severe that an amended return won't fix it, the form 14457 can be your salvation. It's voluntary disclosure. It's a pre-clearance request and application. You want to start the process before the IRS has contacted you, before you have any indication that anybody that could be affected has been contacted by the IRS. The person submitting the disclosure is the individual, a trust executor, or a partnership. There are special features for the disclosure: domestic, estate and gift, virtual currency issues, Bitcoin, Ethereum, offshore issues, employment tax issues. That can be worker classification. And this is the form you would use if you wanted to get ahead of the IRS on a reclassification of workers that you had improperly classified as independent contractors when they should have been employees, and any other issue where you are out of touch with the federal tax law, out of step, and you briefly describe what the issue is. What's next? Lots of personal information. You don't get to hide anything. List all entities. Has the IRS contacted you or any related party? If they have, your voluntary disclosure is too late. Disclose any tax-related litigation. Is something going on over somewhere else that has energized you to make this voluntary disclosure? Disclose all of your financial accounts. Where do you have money? You have to tell the IRS where everything is. That forecloses any opportunity for you to stiff them when it's time to collect. Where are you resident? Anything other than the US? And did a professional advisor have anything to do with the fact that you are now making a disclosure of some willful noncompliance? You got to tell us who it was. And finally, you sign under penalty of perjury. There's a penalty of perjury, GRAT, so that it's pretty serious form, it's pretty serious disclosure. And now I have to confess, why is this in this week's program? After all these years, I did not know that form was available. I came across an article discussing the form. I dug into the IRS website, found the form, and I realized the importance of the form in some levels of tax practice. So I thought maybe if I didn't know, and I thought it might have value, maybe you didn't know, and it might have value. And that's the sort of thing that we share here each week on Thursday at lunch. Away from home, staying in the motel, on the road, in a strange town. Now, mind you, the ability to deduct employee business expenses was repealed after 2017, and it will return to the law after 2025. I know that, but I picked this decision for the away from home test. The truth is, the fact of the matter is, Mr. Harwood lost most of the expenses he tried to claim. Not because the law had been changed, simply because he didn't have the documentation. Or they weren't principally they weren't properly documented. They might have been deductible, but they weren't properly documented. He's a union steamfitter. He's working off the book in the union hall. He goes where the work is. Sometimes he could drive there 85 miles and then drive back home at night. Other times he had to be away during the week. One job he stayed at his sister's house or his cousin's house or something when he was away from home. They substantiated part of their claim deductions, meal, lodging, vehicle expenses, but the amounts had to be reduced by reimbursements. And expenses for one job were excluded because he, quote, could not recall whether that employer had a reimbursement policy. Are you kidding me? What do you mean you couldn't recall? You think the tax court judge here in Harwood, TC Memo 2022-8 was a fool? Of course you recall. You're just not going to tell me. CARES Act college aid grants. Colleges applied for and received grants. Did you know that? To be used for emergency financial aid grants to students to help them stay in school. If the pandemic and the economic upset would have disrupted campus operations such that the students' education would have been interrupted, the school could get a grant. They then could make a grant to the student to cover the cost of attendance, food, housing, course materials, technology, healthcare, tuition. Oh, wait a second. The federal government did not subsidize private colleges. That's what they told me. But they did subsidize students. So the students could pay their tuition and their expenses to who? To the private colleges. You know, doing this work, looking this stuff up will make you, if you weren't a cynic before, you might become cynical working with this stuff all the time. No less than 50% was required to be paid to students as emergency financial aid grants from the grants that were made to the schools. In an information release, the IRS told us about it. In a fact sheet, they gave us 9 questions and answers, which are updated, frequently asked questions on the tax treatment of higher education emergency financial aid grants. It clarifies that an overdue balance at a higher education institution could be discharged with these grants. And when that was the case, well, in any case, the grants would not be included in the student's gross income, and the college has no obligation to report any amount of loan discharged as income. No 1099, no income reporting. Federal government grant to be accounted for by the college, purportedly at least 50% to be given to students, but no reporting required. Right. 2 short slide presentations developed by non-government contributors. I'll make these available to you. They are in the public domain as they are made available by tax analysts without any opportunity for copyright protection. They would be available to you under what I would call the fair use doctrine. They're very short. Crypto cost basis reporting, 12 slides. An individual prepared these, made them available. The tax analysts picked them up, describing a cost basis transfer reporting system for virtual currency, regardless of whether the transaction involves a broker or non-broker. The author is not identified. You can send a request for a copy in chat, and Catherine will pick it up, or I will pick it up, and we will see that you get a copy of this short slideshow if you have a need for determining cost basis of cryptocurrency. Number 2, if you have a client, there comes the first request for that. We'll catch that. We'll catch that. Number 2, let me make sure that's what it is before I just. Okay, we have a request for a copy. We'll pick that up. Maybe Catherine or whoever's monitoring this for SCAPA can help me keep track of the requests for copies. We'll see that gets done. Not right this minute, but before the day is over, okay? This defines wind energy property. Now, if you look at the slide here, to the left, you have wind turbines. That's wind energy property. Then you got some kind of a cable, which this doesn't show, which is wind energy property. Then you have a battery, which is wind energy property. But once you go to the tower, now you are delivering the wind energy, and that is not eligible for the wind energy property credit. That's the point to this slideshow. But it's way too complicated. Let me go back for just a second. The actual slides are so complicated, I wouldn't even try to project them in a computer presentation. You can, if you get a copy of them, you can read them on your computer, but it's not something I want to try to project as part of this program. Well, what do we got going on here? That looks a lot like children and parents. So it must be that we're about to talk about the child tax credit eligibility requirements. This comes up in spite of and you may say, well, I know what that is. Well, perhaps you do, but there are others who don't. And they don't remember every one of the eligibility requirements. So I thought I would pick up this information release. What can affect whether a taxpayer can claim the child tax credit? The child's age, and that changes in 2021. The relationship to the taxpayer, and there's a list. The amount of time the child lives with the taxpayer, and I thought I'd remind you that that's the number of nights. Where did the child sleep? And literally, the IRS counts the nights. Where was the child at night? And that counts for that day with the taxpayer. Whether the child lives in a multi-generational household, and that's for the purpose of determining who contributed the income to carry the costs of the household, who is likely to have borne the costs of the child qualifying as a dependent, and then the child's citizenship, and finally, filing status. All those things affect the eligibility for the child tax credit. Then there is the recovery rebate credit. You probably have figured out I have a subscription to clip art. This is the best illustration of chaos I could get. The recovery rebate credit and claiming the credit can best be described, in my view, as chaos. But we have some new guidance. The process for recovery rebate claims, because it's a 20 and 2021 issue, individuals who did not qualify for or simply did not receive the full amount of the third payment might be eligible to claim the 2021 recovery rebate credit based on your other information for the 2021 tax year. At least one question in 5 of the document's 7 sections, and there are 7 sections. My recollection is there are some 50 or 60 separate FAQs. At least one question in 5 has a new answer. So what you knew about the FAQs before February 17th is no longer valid. You need the new FAQs. And by the way, if you made decisions based on the old FAQs, make sure you document the date of that decision. A return must be filed to claim the credit. Taxpayers may also be eligible for amounts they didn't receive in 2020, but don't include the information from both years in the same return. And to help it be even more confusing, spouses may each receive a letter 6475, which is the qualification letter, and should include amounts from both letters if they file a joint 2021 return. You got all that? It was very helpful, right? I don't do this. I just report on it. South Carolina coming attractions, February 24th. South Carolina Sales Tax Workshop. Complimentary, online, 9 a.m. Today's not the 24th, is it?
Yeah, it's today. Today's the 24th.
We missed it. But the history of these things is I'm sorry. The history of these things is that they will be recorded and you will be able to access the recording for the sales tax workshop. I would check it out and see if you can access the Department of Revenue's workshop that they ran this morning. Well, gang, Catherine, thank you for taking care of the request for the slides. Are there any other questions before we declare victory? Very well. Thank you all. We'll continue to meet for lunch. I will be early next week. I will not be 5 minutes late. Thursday at noon. I'm seeking guest experts. Sometimes, some weeks that's easier than others. And I would appreciate if there is a topic about which you have some special interest that you would like to have included in this program. We don't lock it in until Monday about noon. That it's hard to add a topic after noon on Monday because we like to let everybody know on Tuesday what's coming on Thursday. But if you have a question, if you have a topic that you would really like for us to give some attention to, we're happy to give that our attention. So with that, we'll, as I said, we'll declare victory. Until next time.